Hi everyone, today we're going to talk about an important financial metric, net profit. Net profit is the amount of money a company or individual has left after subtracting all expenses from the revenue. It's a measure of the financial success of a business, as it shows how much money is left over after all costs have been paid. To calculate net profit, we simply subtract all expenses from the total revenue. So, the formula is net profit equals revenue, expenses. Revenue refers to the total amount of money received from sales or other sources of income. Expenses, on the other hand, include all costs associated with running the business, such as product costs, marketing expenses, salaries, rent, and utilities. Net profit is an important measure of a company's financial health, as it indicates how much money is left over after all costs have been paid. It can also be used to calculate important financial metrics like return on investment, ROI, and earnings per share, EPS. So, what does a high net profit mean for a business? Well, it means that the company is making more money than it's spending, and is likely in a strong financial position. However, it's important to remember that a high net profit doesn't necessarily guarantee success. Other factors, like the company's cash flow and debts, should also be considered. In conclusion, net profit is a crucial financial metric that helps us understand the financial success of a business. By calculating the difference between revenue and expenses, we can get a good picture of how much money is left over after all costs have been paid. Thanks for watching. If you have any questions or comments, feel free to leave them below.